Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into this action on this Tuesday, June 11th, 2013. Markets are trending lower today. S&P's down 12, Dow's down 82, Nasdaq's down 28 on the day. So a nice down day. You can see we initially gapped far, far lower, and we ran right into a major support. I gave this out to the intraday stock chat. Perfect gap fill. See this gap right here? I can even remove this line right below. That gap was filled this morning at the lows, and I talked to my members about being buyers there when that did fill. And sure enough, it filled on the first candle. And look at the bounce that we got after that. So the market just turned around, ran up, got back above the 200 MA without confirming below, and moved all the way up to the 50 MA. Since that point, it started to consolidate and then broke down. And we actually got close to the lows of the day before we're getting this little bit of a bounce back. And again, we're looking at the intraday SPY chart, which mirrors the S&P 500. So markets again are trending down today, down a $1.27 on the SPY, but that is right now about 70 cents off the lows of the day, 75 cents to be exact, on the current session. Looking at the daily chart, folks, what I thought was interesting yesterday was the market, again, had a pause day yesterday. We closed basically flat on the day. But notice how the market early in the day had gapped above the 20 MA and closed back below. So that kind of almost gave us a little bit of a signal we could see a little bit of weakness in the markets today. And sure enough, we're getting a pullback. Now, the one thing I will say, as long as we do not take out the lows from a few days ago last week, you can look at this market and say, okay, this right now is just the market pausing after a big push up. You still have to give the benefit of the doubt to the buy the dip mentality, in my opinion. Right? So you still have to say to yourself, listen, every pullback's been a buying opportunity. The general public's going to view it that way. Therefore, I'm not going to step in front of that in a major way. Does that mean we don't short the market? No, of course we're going to short the market when the signals tell us to, just like we did up here. And we made a ton of money on this pullback, but then we turned into longs going up here. And again, as long as you're looking at the signals using the proprietary methodology, you can easily score big on this market no matter what direction it is going. Now, again, the weakness today, what's it coming from? Well, there were comments out of Japan last night. That caused a little bit of a freak out in the markets. And you can see those comments, how they rippled through the currency markets by looking at the FXY, which is the ETF that tracks the yen. The FXY is up $2.90 today. That is a monster move for that ETF and the currency itself. So again, anytime the yen is going up, markets are going to be weak. That's a common theme. We've seen it, and we'll see it again, I'm sure. But yen up, markets down. Remember that. Okay? Next up, what we want to do is go to a couple other charts, and mainly the one other thing I want to mention before I go to a couple other charts, and we'll flip up Apple's chart today up $1.68. But if you look at the rates, so we have the yen on one side affects the market, and the rates on the other side, which is the rates on the 10-year. That's the easiest one to follow. That's interest rates, essentially. Interest rates, again, today are inching up a little bit, and that's a negative for the markets. As I've explained in previous videos, interest rates going up obviously is bad for housing, it's bad for the economy, but it's also causing people to say, hey, listen, if I can now get 2.25%, 2.25% on bonds, why would I put my money in the stock market for dividend yielding plays, which are only going to pay me 2%? And that's what the general S&P is paying right now, is about 2%. So, yes, you have the possibility the markets go up, so that pays you a little extra, but there's also that chance that the markets fall. So you're taking risks in the stock market when you're in that to get a yield of about 2%. In bonds, listen, you hold it to maturity, you're getting your money back plus that percentage amount. So, again, just keep that in mind. So, the market, again, you'll see money flow moving from stocks to bonds when interest rates float up higher and higher. And so, again, that's why yields or the rates of bonds as they go up are negative for the stock market. Okay, looking at Apple today, Apple has a small bearish pattern here on the intraday chart, but it's actually performing one of the better plays today. One of the only few large players to be up on the day, up $1.46 right now. And this is getting a little bit of a relief after yesterday's harsh sell. So yesterday we had Apple trading up nicely early in the day. Then they had their investor conference. People weren't that thrilled by what they said. There were no major new developments. The stock sold off till the end of the day. Gaps lower today on the market and then surges back up. So you got a little bit of a reflex. And again, notice how you have a micro bearish pattern here. This is more for members. If you're a member, you know what I'm talking about here. Micro bear flag right here. But then again, the macro pattern is actually bullish. So it's interesting here. This tells me you could see a little bit of a dip on Apple, but maybe over the next couple days, Apple's actually going to go higher. So short term right here, longer term up. And again, long term for me, I'm talking about like tomorrow or the next day. It's not exactly long term for most people. Long term is like, years for most people. To me, it's a couple days. But in any case, just note that difference in chart pattern on Apple intraday. If we look at the intraday, the daily on Apple, Apple daily is not that pretty overall. Again, you've moved up here. You fell into the 50 MA. You're holding the 50. As long as that holds, Apple has a small shot of kind of holding up. But any sort of break here below the 50 on a closing basis sends it right back to 420. 420 support. If it breaks that, you're going down to a double bottom right down here. All right. So that's your Apple chart. Google, which has had a couple big days, is selling off today just a little bit. Nice bounce off of this general vicinity 50 MA in this trend line. There it went up over the last few days. We got above the 20 MA, but again, no confirmation back above the 20 MA, and you ran into this level right here. Right? You can clearly see how this high and this gap fill all together there. It's telling you there's resistance there. Most amateurs are going to think it's the 20 MA. If you really know what you're looking for, you should be able to tell it's just above that, as we did, and sure enough, you get a small pullback on Google. Going to Amazon. Amazon's had two major up days with a breakout here. And if we look at the chart today, we're seeing a very impressive reversal day from yesterday's gains. So you're negating everything you gained on Amazon yesterday and then some. But technically, you still have now confirmed above this green trend line, which puts Amazon in a stronger position. So even if Amazon pulls back into this 20 MA in this green trend line, at that point you should expect a bounce. I will expect a bounce. Most likely play it for a quick trade over in an overnight period for a day or two. Right, and again, I'll give that out to my members if I like it enough at that point. Post it on Trader's Life or in the Research Center. And again, remember, folks, we offer a free trial here, so 7-day free trial. Easily come in, check it out, find trades. Most people make their whole year subscription in a matter of days during the free trial here by just playing one or two trades in the Research Center. Okay? Let's take a look at a couple other stocks. JPM down 62 cents. But one thing to note on JPM, first and foremost, the stock was below the 20 early in the day. It's now back above the 20. As long as it holds the 20, you got to give it the benefit of the doubt for now. If it closes below the 20, I think it goes all the way to the 50 MA very, very quickly. But the 20 MA still is holding up. And unless we see some sharp selling into the end of the day, this stock does look like it will hold and possibly even move back above that. Okay? Let's see what else we have. Exxon and Chevron are both lower. We'll do a quick check on those. And Exxon's getting interesting with Chevron here. Chevron actually took out the lows of the day right there, but it never confirmed below the lows, nor did it ever confirm below the 200 MA. Neither did it confirm this morning. So they're bouncing it back nicely. You'll have a lot of resistance up here on the chart, but pretty up and down chart on the day, and definitely some weakness there on the charts. If we go to the daily chart, you can see it recaptured to the downside, this key trend line. Bounced yesterday back into it and is now pulling back. It's kind of getting sandwiched between this trend line, the 20 MA, and the 50 MA right here. Right, so kind of a little bit of an interesting chart setup to keep an eye on Chevron. It is on my radar for a possible short if we were to kind of float sideways for another week or so. Should we get the bearish flag pattern with a time count and a couple other algo signals that we have tell us to, we might spin off a little bit of a short there. But we'll keep you guys posted. Again, if you're a member here at InTheMoneyStocks.com, you'll get all the latest updates. I do my videos every single night, which talk about all this stuff in depth, giving you trade levels and so forth, plus the hot charts and alerts. All right, guys, I got to get back to trading. But again, just going back to the SPY, flipping it back, we are seeing the markets just off the lows and getting a good bounce up. Resistance on the spiders will be the 20 MA, the 50 MA, and double top from here. Then gap fill. Support will be the 200 right here where you bounced. Double bottom here at this level down at 162.75. Have a great afternoon, great evening, folks. I will talk to you all soon. Take care.